If you're preparing to buy a house, then I'm guessing that you're going to be looking for a mortgage. Whether it's your first home, whether it's your second home, we know that you can own 10 properties, but you could only live in one. So today, I have the pleasure of having my friend and trusted lender, Troy McCleery, Vice President of American Bankers Mortgage. Thank you, Troy.
You're very welcome.
This video is going to cover all of the best loan programs in 2024. I'm Gia Silva, President of NT Realty. Let's dive right into it. So Troy, let's start from the beginning. I mean, you have been doing this a really long time.
Been doing this for 34 years.
34 years.
Yeah.
So Troy, let's start by just the differences. What are the differences between a mortgage broker like yourself and a direct lender or a bank?
When you work with a bank or a direct lender, they're going to tell you the programs that they have available to you, which may be 1, 2, or 3 different programs.
Okay.
A mortgage broker has different programs, different lenders that we shop for the best rates and terms for the consumer.
Sort of like you would say wholesale, right? When you're going, let's say, to an airline and I'm searching for flights to go to, let's say JetBlue, and I go into the JetBlue website. I could also go into another website that's going to give me JetBlue and much, much more, like Priceline or cheaptickets.com.
Yes, ma'am.
So would you say that's the difference between mortgage broker, direct lender,
100%,
bank?
yes.
Got it.
Mortgage brokers work with several different lenders, many different lenders.
Okay.
And we are going to shop for the best rates, terms that fit your family needs.
Got it. And the direct lender, just, again, few, just
Absolutely.
a few.
Yes.
Got
They
it.
just have their cookie cutter programs, and that's it.
Okay,
And that's what
yeah.
they're going to sell you.
That's the question that we get all the time. A buyer will say, I'm going to my bank to Chase or even a credit union,
Correct.
right? And without knowing that by going with the mortgage broker, they'll have a ton more options.
Absolutely
right?
so.
Many, many more options.
Yes. With the mortgage broker, this is all we do.
Okay.
A direct lender, this is all we do as well. With the bank, a credit union, they're great at deposits.
Okay.
They're great at consumer loans, cars, credit cards, and when it comes to home mortgages, that's not their forte.
Got it. So you would say that definitely way more options, more competitive rates, more competitive terms.
Absolutely.
With the mortgage broker.
100%, yes.
Got it. Okay, Troy, so what are the most common loans right now that buyers are financing their homes with?
The most common loans that we have right now, or that anybody's doing right now, is FHA,
FHA.
VA, and conventional.
Okay.
FHA loans are insured by HUD, Housing and Urban Development. VA loans are guaranteed by the Veterans Administration.
Got it.
And Fannie Mae and Freddie Mac conventional loans are securitized by Fannie Mae and Freddie
By
Mac.
Fannie Mae and Freddie Mac.
Yes,
Okay,
yes,
perfect. Okay, Troy, let's just break down FHA, the FHA loan for someone who is purchasing a single family home, a condo, or a townhouse, and they're gonna live in it, right, as their primary residence. So what is the minimum FICO?
Minimum FICO is 580,
580, okay.
and the minimum down payment is 3.5%.
3.5%.
Yes.
Perfect, for that single family condo or townhouse.
Correct.
What about condos and townhomes? If they have an HOA, right, that needs to be approved, it needs to be FHA
It
approved.
has to be FHA approved.
It has to be FHA approved.
What we're finding out a lot is that a lot of the HOA management companies have not renewed approvals. So we're doing a lot of what we call spot approvals now.
Okay.
So it's the condo documentation. They have to fill out an HOA certification, and we submit it to HUD, and we get an approval for that one project, for that one.
For that one
The
condo,
unit.
that one unit.
Yes.
And what determines whether a complex, a condominium complex, is FHA approved or not?
It's the saturation
Okay.
of how many units already have FHA financing on it,
Okay.
how many units are owner occupied, how many units are non-owner occupied or rentals, okay, the financials, the budget, and how many units are delinquent on their HOA dues.
So Troy, before we move on to VA, is there anything else that's important about FHA?
FHA actually is great for first-time home buyers. It expands the qualifying.
Okay.
Is where your debt to income ratio go 46 up over 56. So 46% of your gross monthly income can be used towards your housing, and 56% can be used with your your housing plus your total debt.
Plus your total debt. So let's move on to VA now, right? So in terms of VA, it's pretty much 100% finance. Is that correct?
It is. So if you have been active duty for 4 years, or have did 6 years in the reserves, you do qualify for a VA loan.
For a VA loan.
Yes.
And this is just for single family condo and townhouse?
It's actually for 1 to 4 units, single family and townhome.
Wow, so it's all the way up to 4 units?
Yes.
Okay.
Condos still have to be VA approved.
Okay.
Townhomes or PUDs, planned urban developments, do not have to be VA approved.
Oh, okay. So the same thing with like FHA, the building needs to be
Correct.
approved when it's a condo.
Yes.
And then when it comes to multifamily, when you're getting into a duplex, triplex, fourplex, of course, they're going to live in it. It's going to be their primary. It's still going to be 100% financed.
Still 100%
Zero down.
financing. Yes.
Wow. And does it need to pass any test?
It doesn't have to pass any test, but if we're using rents to qualify, we're going to use 75% of the gross rents.
Okay.
And typically VA wants to see that you have had rental experience before. But if you don't have rental experience and you use a management company to manage the property, you can use the 75%.
Ah, and so by rental experience, they mean if you've been a landlord before.
Correct.
Got it. Okay, so if the buyer that's obtaining the VA loan has not been a landlord before, then what is it that they have to do?
They have to hire a property management company.
Okay.
Get the agreement that they've hired a property management company, and then we could use the rents from the subject property to qualify.
Got it. That's fantastic. What a
Yes.
great program for
It's
VA
fantastic.
buyers. That's
Yes, it
that's
is.
incredible. All the
Yes.
way up to 4 units. So literally a veteran right now can look for a 3-unit building, a 4-unit building. If you're a veteran, you could live in 1 unit and rent all of the other 3 and
That's
get in
correct.
with 0 down. That's incredible.
Very correct.
Let's go into conventional now,
Yes.
right? We have Fannie Mae and Freddie Mac. So let's
Correct,
go into
yes.
conventional. What are the qualifications for a conventional loan? Let's start with minimum FICO score, minimum down payment.
All right. So minimum down payment is 3%.
3%?
Okay. Minimum credit score is 640.
Okay.
Fannie Mae and Freddie Mac are what they call risk-based pricing. So it depends upon your credit scores. That is going to determine on the pricing, and also the lower the credit scores, the more difficult it is to get approval.
It's kind of like compensating factors too,
Absolutely.
right? When it comes to someone's credit and then their income as well. And so for conventional, what's a debt to income ratio?
The debt to income ratio is your housing payment plus your total debt.
Plus your total debt. And that
Correct.
would be a total of, for conventional?
The guidelines are 45%,
45.
but with higher credit scores, we're seeing it go up to 49.9.
Oh, wow.
Yes.
Okay. So pretty similar to FHA, sort of, right
Yes.
around there. Okay.
If we're buying 2 to 4 units, great change this year is that you can get in with 5% down. As long as-
5% down.
Yes.
Okay, so I think that's going to really move us into the 5% down. We speak to buyers all of the time that are looking to house hack, right? Of course, they're looking to live in 1 unit and rent the other ones. And before, it used to be, what was the minimum down payment before?
20%,
20%. And
Correct.
just this year in 2024, we've had it changed to now
5%.
5% down.
Correct.
Is there any tests that they also have to meet?
They do not.
Not at all. They
do
just
not.
need to have those qualifications.
Correct. And we're going to use 75% of the rents on the units that are going to be rented out as income to qualify.
75%. So
Correct.
if it's a triplex, they're going to be living in 1, and then they'll take the 75% of the other 2 units.
That is correct,
If it's
yes.
a fourplex, you live in 1, you take 75% of the 3 units.
Correct.
That is fantastic.
Yeah.
So Troy, is there anything else important to know about this 5% conventional down payment?
Actually, with all loans, it's all case by case basis.
Yeah.
Every family, every situation is going to be different.
Yeah.
So it all depends upon credit scores, income, assets. That is going to determine our approvals.
Okay. Yeah, and you know, this is where I'm having the conversations. We're having the conversations with buyers at times where they're asking, some of the things that they're asking is, I don't believe I can afford a home yet because I have all this debt right now that I have to pay. And there's so many misconceptions out there that even before they're reaching out to us, right, as their real estate agent or their lender, they're kind of having these misconceptions already, which kind of paralyze them,
Yeah.
right? And that's really interesting.
Yep.
And I always say to them, you don't know what you don't know, right? And unless you're able to analyze your whole entire financial picture,
Absolutely.
right? And have somebody like yourself who's a professional, who's been doing this for a really long time,
Absolutely.
be able to analyze everything and say, okay, you might need to do X, Y, Z to get to a point to buy a
Absolutely.
home.
So that's why it's very important to get pre-approved.
Yes.
What we do at our company is that we will tell you what we can qualify for now and give you a roadmap to what you can qualify for in the future, whether it's paying off debt, raising our credit scores, Whatever we need to do to get to your goal, that's what we try to do.
Exactly. Now, this is all done during the discovery process. So if you haven't watched the whole buying process, make sure you watch that, because all of this,
Yes.
speaking with the lender, right? Having the discovery process with your agent, figuring out your numbers, and
Yes.
if it's that time that you buy now, or do you need to take these steps to then be ready to buy
Absolutely.
4 months,
Absolutely
5
so.
months, a year from now?
100%.
That's just so important. With these loan programs, I know that there's gonna be a lot of buyers now that are gonna get out of their seats, right? Looking to buy. I'm really curious to know, what are your thoughts about rates this year?
We're in a very uncharted territory right now as far as rates. We've seen rates get better.
Yeah.
About 1% since October of last year. This year, you're going to have peaks and valleys, which we've seen already this year. A month ago, we were at 6% or even lower.
Yeah.
Now we're just above that. Overall, we do feel that rates are going to get better because it is an election year.
I'm just curious, do you see them coming down to 4s again and 3s?
Well, economists are 50% right, 50% wrong. So half the economists are saying that we're going to be below 5.5.
Okay.
Some of them are saying that we're going to be sub 5 by the end of the year, if not the beginning of next year.
And what does Troy believe?
I believe that right now is probably the best time to buy while rates are up, because you can always refinance if rates do get better. But when rates go down, property values go straight back up.
Exactly. I mean, we are having conversations right now with people that believed that properties were going to depreciate when rates were at 3 and 4%. And we're like, no, we'll wait for properties to go down because people are just paying hundreds of $1,000s over the asking price.
Correct.
And now they're seeing that maybe that move wasn't quite the best move.
Absolutely. So
right?
that's all supply and demand.
We talk about supply and demand so much about in our videos to know exactly which market we're in. We are continuing to be in a seller's market. Most areas in Southern California are at like 2 months supply. We're gonna continue seeing that. Do you believe that also?
I do believe that. I do think that the supply will come back up when rates do come back down.
Okay.
Because the amount of people that refinanced in 2020, 2021 to 3% or less, it's tough to sell and buy another property and double your rate.
You know, Troy, there's actually, I'm really curious about this. I just had a question, and these are just kind of extra questions that we've been having with consumers that are looking to purchase their home. A lot of them, they have student loans, right? And a lot of them are thinking like, if my parents or someone that I have that I trust can help me co-sign with their income, but they own a property, would I still be able to purchase with 3.5% down?
Absolutely.
You can?
100%, yes.
Okay.
Having a co-borrower, a non-occupying co-mortgagor,
Yeah.
okay, such as a parent, family member, if they own a home, that's all right. We just include their debt into the qualifications.
Perfect. Okay, so
Okay.
that's going to be important to know.
Yes, and as far as student loans actually got a little bit more liberal this year as well, or within the last year.
Okay.
So typically we would take 1% of the total loan balance, student loan balance, and use that as a payment. Okay, now it got dropped to 0.5%
Okay.
of the total loan balance if a payment is not showing on the credit report. But you can also use what is called an income-driven repayment program as well.
Okay.
And if someone actually has an income-driven repayment program on their student loans, that's based upon their income, so the payments are a lot less than the 0.5%.
Got it. And I'm just wondering, I have to ask, is there anything else that buyers may have a misconception about because it was a rule, or that's the way that an underwriter would see it years back and now it's a little bit different? Is it a little bit more flexible now with certain guidelines?
Absolutely. So
Okay.
it's all what the automated approvals give to us now, what we call DUs or LPs.
Yeah.
Okay. And as long as you're getting the DUs or LPs, underwriters are getting approvals. And that's based upon credit scores, income, assets.
Yeah.
Is how we obtain the automated approvals.
Okay. And in terms of assets, I'm glad you pointed that out. In terms of assets, a borrower would need to have certain number of reserves, certain months of reserves as assets?
That's all going to depend on credit scores.
Okay.
Reserves are based upon your total monthly payment on your new mortgage.
Okay.
So reserves are not going to be used. We need to show those in your bank account after the close of escrow.
Okay, so let's say someone's monthly payment is going to be $3,000 and the underwriter, the lender, is requiring 6 months of reserves. They're looking to see $18,000 in your bank account.
That is correct.
Got it.
That's
okay, so
correct.
that's what reserves would look like for a buyer if it was required for them
That
to
is
have
correct.
it. And you know, it's really interesting because every time we're speaking with buyers and they've gone to either their direct lender, their credit union, right? They have this understanding of what they qualify for, and it's very boxed. And I know that when we've worked together for so many years, it is so important to understand the picture from the beginning.
Absolutely.
So you know exactly, right? It's like a huge puzzle, and you have to know where to fit all the pieces.
Yes.
And a lot of the times when we're speaking with buyers, I feel like they don't understand how important it is to get it right since the beginning.
Absolutely so.
Right?
There's a lot of different incomes that we could use as far as a borrower. I mean, if you're self-employed, depreciation income, there's a lot of different incomes that you can add back in. As far as being a W-2 employee, bonuses, overtime, those all have to be averaged for 24 months.
Yeah. So there's a lot of different ways that you can, again, package a loan, but because everybody's finances are different, circumstances, lifestyles, jobs are different, it takes going into the discovery process to
100%.
Figure out, let's see where you're at today, where you're going to be tomorrow, and is it a good time to buy for you today?
So. Which also brings up to this as well as funds to close or your down payment. Whether it's conventional or FHA, you can have a 100% gift from a family member.
100% gift.
Yes.
Now explain that. Let's clarify that. 100% gift meaning that, does it have to be a parent? Does it have to be somebody that's...
It has to be a family member.
Has to be a family member?
Yes, yes. Anybody but a cousin.
Got it.
Okay, because everybody's cousin.
Can't be cousin Vinny.
Exactly. On FHA, we have to get gift donors' bank statements to verify that they have enough funds to give.
Okay.
A gift letter, and then they would wire that money directly to escrow at the time of closing to verify that transfer of the gift.
Okay, and that would be approved by the
Absolutely.
lender. That would be okay.
100%.
You see, so there's all of these things that I'm sure buyers don't know yet, right? Gifts, you can count gifts. There are certain debt that you may not even have to pay yet.
Correct.
A lot of buyers think that I have to pay all this debt before I could even qualify for a home. 3% down on conventional, like that's incredible. And then being able to be a veteran and purchase 0 down, 100% finance, all the way up to 4 units. They're out there so that consumers like yourself who are watching this video can actually go and see where you fit, right? Where you're fitting. And if you don't quite fit just yet onto one of the programs, you at least know what it is that you have to do.
And the great thing is too, is that if you don't have the money, you don't have the parent or the family member to give you a gift, there's grants, there's down payment assistance programs. There's so many different programs to get families into properties.
That was a lot of great information, Troy. Thank you so much.
You're very welcome.
And just to recap on everything that we've discussed, we have discussed loan programs, some of the best loan programs for someone who's looking to find their primary residence, whether you're a first-time buyer, whether you're somebody that's purchasing a property for their second time. As long as this is going to be your primary residence, these are the loan programs that are available to you. FHA, conventional, VA with very, very little down payment to no down payment as a VA. This is why it's so important to get it right from the beginning through the discovery process to know exactly where you're at, again, which program you fit or what you need to get there, but get it right from the beginning so that you are a well-informed and competitive buyer in this market, because we're going to continue to see a really, really fast market in 2024. Thank you so much, Troy, for all of that information. If you want to get a hold of Troy, his information is below. And remember, if you have a specific situation and you'd like a consult with us, make sure to reach out. And if you found this video informative, make sure to like, comment, and subscribe below. We'll see you next time.